Let's start with the premium on this. This is like a 50% premium for Taubman, for a company whose shares have kind of been in decline for years. Their funds from operation have been in decline for the last couple of years. Why pay such a high premium?
Partly it's scarcity value. This is one of the few assets that Simon could go after. They've obviously tried to go after it in the past and didn't get it that time round. Look, I think the Taubman family obviously control the asset. They still have the majority of the voting structure there. So it was very difficult for Simon to do anything that wasn't a nice premium and didn't get them on board with the price. As I say, this is an asset that people have tried to buy before. I think Brookfield had looked at it in the past. Obviously, Simon looked at it in the past. They also had an activist in the stock. So if you want to get this done, you're going to have to pay big.
And they've been holding on and off discussions for a while. What's been preventing them from actually getting it done?
I think in real estate, there's a lot of big egos, and it seems that is particularly true of the mall sector, right? A lot of characters, let's say that. And that seems particularly true in the mall space, and we saw this with Macerich, which was another company Simon tried to buy a few years ago. They went hostile, then backed away, that failed. And I think the same with Taubman. Look, it's an asset that, as Romain points out, its shares have been on the slide for a while. It made sense to consolidate with someone else, but they didn't do it, despite pressure from activists, despite pressure from their shareholders. Now they have. It will be interesting to see sort of how Simon manages to integrate it.
All right, so another deal that's actually been kicking around for a while is Xerox HP, sort of a catch-me-if-you-can deal. Is Xerox raising its bid a little bit?
Other characters, right? Carl Icahn in the middle of both companies. So Xerox has bumped its bid by $2. Now, very interestingly, if you look at the trading in both companies, HP is actually flat on this. Xerox is up slightly because the market basically doesn't think Xerox can get this done. It's too big an asset for Xerox to try and swallow.
And the market doesn't seem to really understand it.
The market understands it as a play by Xerox to get itself acquired, right? Which would be the logical thing. If these companies are combined, one is 4 times the size of the other.
Okay. What's in it for HP?
Well, at the moment, not very much. They're just hanging out and waiting and saying to Xerox, look, it's your move, it's your move, it's your move. At this point, do HP come to the table at $24 a share? Very unclear. They've played a smart game here because they had it at 22. They said, we're not even going to torture you at 22. That's ridiculous. Now it's at 24. Could say it's Xerox's move to make, or you could say HP could try to come to the table, but who knows?